Welcome to the MUFG Global Markets FX Week Ahead podcast with Lee Hardman, Senior Currency Analyst at MUFG. It's Friday, 24th February 2023, and joining Lee to pose some questions on the financial market themes for the week ahead is Simon Mays, Head of UK, Ireland and Swiss Corporate Sales. The following podcast is intended for professional investors and eligible counterparties only, and not for retail clients. Any content should not be regarded as an offer to conduct investment business or an investment recommendation, but for information purposes only.
Good afternoon, Lee. It looks like we've had another week of dollar strength. It's continued to rebound. I think the market's adjusting for stickier inflation in the US. Do you see anything upcoming that could potentially derail the dollar momentum at the moment?
Yeah, hi Simon. Yeah, as you say, this has been quite a turnaround for the dollar this month, and as we kind of go into next week, the dollar is regaining further upward momentum. Obviously, today we've just had the release of the latest PCE deflator report for the US for January, and that showed a notable upside surprise for both headline and core deflators, which, like you say, reinforces concerns in the market right now that inflation in the US could prove more persistent than people had been hoping for. Obviously, on top of that as well, as we've seen in recent weeks, the latest kind of activity data from the US as well has pointed towards kind of more resilience in the US economy, particularly the labour market, and that as well as certainly will give more concern to the Fed that they haven't perhaps done enough in terms of tightening policy yet to generate a sufficient slowdown in growth to help bring in inflation back towards their target. So for now, this is very much kind of leading to hawkish repricing of Fed rate hike expectations. Markets now move to fully price in at least 75 basis points of further hikes from the Fed by the middle of this year, and that kind of higher expectation for a higher terminal rate in the US is putting upward pressure on the dollar again, which is kind of a repeat of what we saw last year in terms of the price action in the FX market. So short term, it's difficult to see what's going to turn this around until we start to see some evidence of softer inflation in the US or a sharper slowdown in the US economy or labour market. So we think that the risk is still there. In the week ahead, we see further upside for the dollar from here.
And do we agree with the market pricing at the moment in regards to terminal rate, or are we upping our view on what the terminal rate will be for the Fed?
Yeah, at this stage, we're still comfortable with our view that the Fed will do a couple of more 25 basis point hikes. Obviously, a lot of things can change by the middle of this year, which is potentially when the Fed will be thinking about delivering a third 25 basis point hike. So we don't think yet it's a done deal that they'll definitely do another 75 basis points of hikes. We still have a view that inflation, we should see some more evidence in the coming months that inflation is starting to reverse in the US, and that should at that point give the Fed more leeway to feel that they've done enough in terms of tightening. But like I say, in the very short term, it's difficult for the market to kind of look beyond the kind of disappointing data that we've had recently on the inflation front, and that certainly is encouraging the market to price in a higher risk that the Fed needs to do more than what we're expecting.
And today we also had the confirmation hearing for new BoJ Governor Ueda. So have our views on dollar yen changed at all after this?
Well, in terms of our views for BoJ policy, obviously the comments themselves, there was nothing really significantly surprising in terms of the comments today. They were broadly in line with the kind of current BoJ policy thinking. We still think on balance that if there is going to be a change in policy settings under the new governor at the BoJ when he takes power, we think it's more likely that he will make further adjustments to yield curve control. And the comments today do suggest that he would be open to making adjustments to yield curve control. So we do think that's a possibility. And certainly that's still our expectation that we could see yield curve control abandoned in Q2. But we do have to acknowledge that the comments today do suggest that he might not be in a rush to kind of fully move away from yield curve control maybe as quickly as we are currently anticipating. Maybe he wants to, as he suggested, speak more with other board members on the BoJ, and obviously if inflation as well continues to the surprise to the upside, he did suggest that they would be open to more kind of full review of their policy settings. So I think that in terms of the risks, it kind of reduces the risks, I think, in the very short term, that we see a bigger shift away from current policy settings, and increases and reduces the risks as well that any change in policy will be kind of more imminent. Could take maybe a little bit longer for any changes to come through once he takes over at the BoJ. So that kind of speculation in the market earlier this year that we could see more changes to BoJ policy, and that did lead to a pickup in speculative demand for the yen. Obviously, it looks less likely that demand will return for the yen in the very short term, which I think means that the kind of balance of risks now are tilting more to the upside for dollar yen. It leaves dollar yen probably more sensitive to rising yields outside of Japan, and as we've seen in recent weeks, the move higher in US yields is certainly starting to have more of an impact in terms of lifting dollar yen from here. So if we aren't going to see any imminent shift in BoJ policy and that kind of speculation fades, and at the same time if US yields keep tracking higher, then I think the risk is that dollar yen will go back up towards the 137 level short term, which is where the 200-day moving average is. And then potentially, obviously, if we break through there, the market will then start to think about more seriously whether we could get back up towards the 140 level. But like you say, so far we've only heard from Ueda-san today in his confirmation hearing, and he will be speaking again on Monday. He wouldn't expect them to be in a significant shift in his comments on Monday, but we're still really learning about his policy stance. So it could still be too premature to make any kind of strong stand in terms of where he stands on policy at this stage. There's still a potential there for some hawkish surprises going forward, particularly if the inflation data as well and the wage data in Japan, if that were to continue to come in on the strongest side, then that would certainly support the case for further kind of normalization of BoJ policy going forward.
Thank you very much for your thoughts, and have a good weekend.
Yeah, thanks, Simon.
Thank you for listening to this MUFG Global Markets podcast. Rate, review and subscribe, and reach out to your MUFG sales rep for more information. Come back next week for more insights from the Global Markets Research Team.